Hi, I'm Brett Swartz, founder of Capital Gains Tax Solutions, where we use the Deferred Sales Trust to help you escape feeling trapped by capital gains taxes. In this video, we're covering the 80% that can go to real estate and 20% that needs to stay with the financial advisor and securities, and some of the reasons behind it. Some of our clients, they ask the question, hey, why not 100% of the funds? And the simple answer is we don't want to put too much stress on the structure itself, and we don't want any one particular investment to fail. So think of it like this. You go to a bank and a bank says, look, I'll loan you $1 million, but you need to keep a reserve in our bank. And it could be 5%, 10%, up to 20% of a reserve, which basically would be liquid and it would be available to pay on the loan just in case something happens, right? So it's just a simple reserve. So in the 24-year track record, and with the thousands of deals that have been closed, and all of the financial advisors who have managed the funds, so far they've been able to hit the target payout on over any given 10-year period. So that means they've been able to return or pay off the loan, which essentially this is position you're taking. If you're closing on the deferred sales trust, you're becoming the lender, and all of the funds are owed to you. And so the trust itself and the structure, how we structure it, we don't want too much stress being on any one particular deal. So we want to make sure we can pay you back. And so the worst case scenario would be, let's say you take 100% of the funds and you go out into a real estate deal and that deal doesn't work out, and everything and the structure crumbles because it can't pay you back. So we don't want that to happen. We want to make sure that it does pay you back and that the investments aren't too much risk. The second part about it is, in the very beginning, when you set up the trust, you have what's called a risk tolerance questionnaire. And that risk tolerance questionnaire, you get a score, and that score determines, again, your level of risk, which determines the allocation of the funds. And the same reason we don't want to take on too much risk is the same reason we have to have certain parameters in place to only allow a certain amount to go back into investment real estate. Now, your counter to that may be, well, I think that investment real estate has lower risk than the stock market. And I would agree with you too, but it's still about diversification and liquidity, which is the next part about it, which is very important for, again, the structure to maintain that 20% amount, which would be in liquid, diversified portfolio of investment grade securities. By the way, that money is still yours. It's still owed to you and it's still earning an interest. It's just available in case this other 80% for some reason doesn't work out. So we wish we could give you 100% of the funds. We really do, but we don't want to put on too much pressure or stress on the trust. And our goal and our focus is to make sure we pay you back that rate of return. By the way, what is the rate of return? Well, that's covered in a few other videos, but we'll cover it quickly here too. The rate of return is generally somewhere between 6 and 8%. Most of our clients that are moderate risk are looking at about 8%. Okay, after fees, netting about 6.5% on a cash flow basis. Over any given 10-year period, though, we're looking to hit that 8% total return, net of all fees. So that is the goal. That is the target. So that's sort of how we're getting that. Now, remember, you can always renew for another 10 years, and then renew for another 10 years every 10 years, and keep doing that and pass it on to your kids, and your kids can do the same thing. Also, it can be sent to charity as well as a way to share your estate in a different way. So those and a number of other questions can be found at capitalgainstaxsolutions.com, or answers to those questions. You can also schedule a one-on-one consultation with myself. And if that looks like promising, that the deal looks promising, you want to move forward, we can schedule a one-on-one time with or a team conference call with the tax attorneys. So go to capitalgainstaxsolutions.com, click on book a call now, and all of that is no cost. And with any of us or the attorneys, unless and if you do the deal, do we actually get paid. Subscribe to this video, give a like or a comment. That helps to spread the information. Share this with any friends or family who are selling, again, a business, commercial real estate, or high-end primary home, and so that they can escape feeling trapped by capital gains tax, and so they can create and preserve more wealth. Thanks for watching this video. We look forward to speaking with you soon.